Hello, I'm Sam Meredith and welcome to the weekly wrap-up, where joining me to discuss the market movers this week is Barry Sendach, President of Forex Global Solutions. So Barry, the Greek government struggled to pay more than 2 million pensioners this week, citing a technical hitch as the cause for the delay in payment. Further to this, bailout talks with creditors are expected to stretch into the weekend. How do you assess market sentiment surrounding the possible Grexit?
Well, I think they've been discussing the Greek exit, for quite some time now, and it wouldn't be a surprise to anybody if they did exit. But I don't think anybody really wants them to exit, and I think Greece has the wherewithal, to pay the money that they just choose not to. This new socialist party that took over, they ran on the platform that they're going to get this deficit payments cut down. So, although they're borrowing money or they need money, they made their pension payments. They're not collecting their taxes in Greece as they're supposed to, and the confidence in Greece is diminishing. The banks are seeing withdrawals, every day. Very little money's going in, and if they were forced to go back onto their drachma, who's going to have any confidence in them? They'll have rampant inflation there, and they'll have a tough time, and they're having a hard time now. The problem is that a lot of people retire at a very young age there, and they don't work very much. They must have like a 28 or a 30-hour work week. They have excessive holidays, and that's what people got accustomed to. But people go to the government and they want the money, but the government doesn't have any money. The government only has the money that people give them. Government isn't a business. They don't build anything. They just collect taxes. And if they can't collect their taxes and revenue, how are they supposed to pay it? But what they do have is they have assets, within the country, whether it's minerals, oil, whatever. And I think that far exceeds their deficit.
The Bank of Japan has announced they will not be attempting to boost monetary stimulus, even as it pushed back forecasts for reaching a 2% inflation target. Governor Kuruda accredited the delay to the tumble in oil prices. Were you surprised by this decision, and how are you expecting the Japanese yen to perform against the US dollar in the short term?
Well, the US dollar against the yen, it's been consolidating probably in the last couple of months. So, without an announcement, it'll probably stay in consolidation. Every time they have one of these stimulus in one of these countries, it's like when you have a balloon. If you push it in one side, it has to pop out somewhere else. And if they're going to cause a currency war, which has been rumored, which they call it when Japan tries to get their yen lower and lower and lower so that people buy their stuff, then the rest of the world reacts. So if you know that if I lower my prices, then the next guy's going to lower their prices. At what point do you jump off? Then it starts affecting the government dramatically.
Lastly for today, what is it in particular traders can look out for next week? Are there any potential surprises in store for us to keep our eyes on?
Well, I think the NFP in the U.S. May surprise some people. They're having layoffs. The economy in the U.S. is still not great. So they said unemployment is 5.4 now in the U.S. But we have an awful lot of people, probably 15 million. Out of you can't look at the 300 million because a lot of people aren't in the labor force. Some are senior citizens, some are kids, some are disabled. So that those people don't count. So I think the NFP number is going to be an interesting number on Friday.
Thank you, Barry. For more updates and to see how the markets are shaping up next week, join Sinead McLaughlin for the week ahead on Monday. Goodbye for now.